Hello everyone. Welcome to the Blockchain News Club. Let's take a brief intro into today's crypto updates before going into the details. First up, Elon Musk aims to build crypto-based everything app with built-in crypto payments. The payment service will back fiat currencies, but will also be able to accommodate cryptocurrencies. SEC official says FTX failure shows need for private placement reform. A commissioner of the Securities and Exchange Commission, Crenshaw, seeks greater disclosure for equity offerings made outside public markets including crypto. 4 senior U.S. officials in the White House have called on the U.S. Congress to step up its efforts in regulating the cryptocurrency market. Legal expert, John Deaton, recently commented on the case, highlighting the SEC's schizophrenic argument regarding what constitutes the common enterprise in the Ripple case. He believes that there is a possibility that the presiding judge could deny summary judgment. John Deaton has said that the blockchain payments firm, Ripple Labs Incorporated, will win its ongoing lawsuit with the United States Securities and Exchange Commission with zero doubt. IG Bank, a London-based company, wrote a piece about the Ripple vs. SEC lawsuit late last week. The news is intriguing because it demonstrates that major financial players are still paying attention to the crypto business. Before we dive deep into today's updates, please subscribe to our Blockchain News Club channel. It will help us immensely. Elon Musk wants Twitter to be an everything app like China's WeChat. This is why Twitter has been teasing about adding payments to its platform. Musk said in October of last year, when he took over the company, buying Twitter is an accelerant to creating X, the everything app. Twitter probably accelerates X by 3 to 5 years, but I could be wrong, he added. Cointelegraph said that Elon Musk, the CEO of Twitter, has told his developers to set up the platform's payment gateway for crypto features that will be added in the future. 2 people who know about Twitter's plans told Cointelegraph that the payment service will support fiat currencies but will also be able to handle cryptocurrencies. People think that it is still not clear whether the payments will use blockchain technology or crypto technology. In December 2022, it was said that leaked images of Twitter coins, a secret digital asset that was being made and would be used for payments and tips on the platform, had been found. But the images of the project that were leaked in January 2023 didn't focus on crypto or blockchain technology. Based on information from Cointelegraph, rumors started to spread in October 2022 that Twitter was working on a prototype of a wallet that would support crypto deposits and withdrawals. Sources say that the payment system is likely to go forward with the help of fiat currency. Reports say that Twitter has moved forward with state-specific regulatory licenses across the United States. These licenses would allow payments to be made on the platform. The process of getting a license in the US should take about a year. Moreover, Twitter Payments LLC concluded its registration with U.S. Treasury Department's FinCEN, which would ensure its ability to process payments. After future confirmation of U.S. licenses, Twitter intends to get approval for regulatory licenses overseas. SEC official says FTX failure shows need for private placement reform. A U.S. financial regulator has asked investors who buy company stock through private placements to give more information. The collapse of the cryptocurrency exchange FTX shows how dangerous it can be to not give enough information. Crenshaw, a member of the Securities and Exchange Commission, said in a speech on Monday that larger companies, including unicorns, or private issuers with a value of more than $1 billion, were taking advantage of a small business exemption from full disclosure. Crenshaw said, private companies now have access to more and more private capital, which makes them bigger and more important to investors in our economy, but they don't have the same protections that are built into public markets. Crenshaw gave examples of companies that didn't give enough information. FTX, the failed blood testing company Theranos, and WeWork, a company that rents out office space. In November, FTX filed for bankruptcy, and its former CEO is being charged with fraud. Even though Sequoia Capital and the Ontario Teachers' Pension Plan were among FTX's investors, Crenshaw said that the company's bankruptcy filings showed that it didn't even keep an accurate list of its bank accounts or account signatories. Crenshaw said in an interview, "This is really made more interesting by crypto." Crenshaw warned that the unintended and perverse effect of the widespread use of the SEC exemption for private placements may actually hurt small businesses it was meant to help, because capital flowing to large players tends to get locked up because private markets aren't very liquid. She suggested a 2-tiered system of disclosure that would require more information from larger private issuers and deals, similar to how public markets work. Crenshaw also called for a re-evaluation of what makes people accredited investors, saying that they should have access to more information no matter how much money they make or how much money they have. The de facto assumption that accredited investors don't need to reveal anything isn't true. 4 top U.S. officials in the White House have asked the U.S. Congress to step up its efforts to regulate the cryptocurrency market. CoinDesk says that the officials wrote that Congress should give regulators more power to stop people from misusing customers' assets and reduce conflicts of interest. In the statement, Congress was also told to make crypto firms more open and transparent, increase the penalties for breaking rules about illegal financing, and work more closely with their international law enforcement partners. The officials also told Congress what it shouldn't do when making new crypto regulations, such as give big institutions like pension funds the green light to dive headfirst into cryptocurrency markets. Officials at the White House said this would be a grave mistake that could make it harder for cryptocurrencies to work with the rest of the financial system. They wrote, "Some cryptocurrency entities don't follow the rules about money and risk that are in place. Also, cryptocurrency platforms often mislead customers, have conflicts of interest, don't provide enough information, or even commit fraud. Safeguards will make sure that new technologies are safe and good for everyone, and that the new digital economy works for everyone, not just a few." More than 28 tech groups that make open source projects have recently asked Congress to protect the privacy of consumers when regulating the blockchain space. The crypto world is still paying close attention to Ripple's ongoing legal battle with the U.S. Securities and Exchange Commission. After both sides filed their summary briefings, it is still unclear what will happen to Ripple and its XRP token. Since the judge's decision hasn't been made public yet, legal experts are still making guesses about what might happen and how it might affect the cryptocurrency industry. One legal expert, John Deaton, who is the founder of crypto law, recently said something about the case. He pointed out the SEC's schizophrenic argument about what makes the Ripple case a common enterprise, and he thinks that the judge in charge could deny summary judgment. Based on the SEC's schizophrenic argument regarding what constitutes the common enterprise in the Ripple case, there's a possibility Judge Torres could deny summary judgment and rule that there is a genuine issue of material facts as to the existence of a common enterprise, Deaton said in a tweet on January 30. A key part of figuring out if a financial instrument is a security or not is whether or not it is part of a common enterprise. Deaton had thought that the case might end in a settlement, which is interesting. The lawyer said that even after the summary judgment, it's likely that Ripple and SEC will settle to avoid more appeals. Ripple says that the SEC wants a ruling that XRP is an investment contract, but that there is no contract, no rights for investors, and no obligations for the issuer. The SEC has said that Ripple uses invented criteria that do not follow U.S. securities law. It's important to note that the outcome of this case will not only affect Ripple and XRP, but it will also set a precedent for the cryptocurrency industry as a whole. In this case, the SEC is suing Ripple for selling XRP tokens, which are securities, without having them registered. John Deaton, a crypto lawyer and supporter, has said that there is no doubt that Ripple Labs Incorporated, a blockchain payments company, will win its ongoing lawsuit with the U.S. Securities and Exchange Commission. Deaton, who is also the founder of Crypto Law Media, said this on Twitter in response to a tweet from a user who said that the separate lawsuit between the U.S. SEC and Grayscale Investments will probably end in Grayscale's favor at the D.C. Circuit Court. Deaton agreed with this assessment, confirming that the subsidiary of Digital Currency Group has a 50-50 chance of winning at the D.C. Circuit Court. You may remember that Grayscale sued the SEC back in June after the government agency denied its request to turn its most popular product, Grayscale Bitcoin Trust, into a full-fledged spot Bitcoin exchange-traded fund. Grayscale's argument is that the regulator's decision to say no is unjustified because it has already approved a number of Bitcoin futures ETFs in the past year. The SEC's argument hasn't changed, and it has to do with the fact that Grayscale doesn't have the power to stop price manipulation in the cryptocurrency industry as a whole. Deaton thinks that Grayscale has a 75 to 80% chance of winning at the highest court because the Supreme Court is made up of people who don't like when government agencies go too far. The ruling, like the SEC versus Ripple case, is seen as one of the most important for the crypto industry. The precedent that will be set can affect the future of the industry for decades to come. Deaton thinks that Ripple has a very good chance of winning the regulator if the case goes to the Supreme Court. This is because of how the court decided in the West Virginia versus EPA case. Several other lawyers and outside observers agree with John Deaton and the amicus briefs that have been filed. Ripple has as many as 3,000 statements from the company's partners attesting that they use the XRP coin as a utility and did not expect to make money from it as a security. The SEC says that the company is selling cryptocurrency as a security, which is against the law. Even though XRP is now worth 41 cents after a 1.3% increase, many people still think that it will soar above $1 when the case is over. Late last week, IG Bank, a company based in London, wrote an article about the Ripple versus SEC lawsuit. The news is interesting because it shows that big players in the business world are still paying attention to crypto. IG Bank is a financial company that is regulated by Switzerland and helps professional clients invest and trade. It's said that a win for the SEC could make it hard for crypto companies to grow. Also, in order to make money, crypto companies like Ripple often release new coins. The bank went into detail about the case and said, if Ripple wins, XRP could go through the roof, but since the case is still going on, this is far from certain. John Deaton, the founder of Crypto Law and a supporter of Ripple, recently tweeted a warning that cryptocurrency would soon be shut down in the most aggressive way yet. This was said after a White House policy brief on how to reduce the risks of crypto. Here's what the statement said. We have spent the past year identifying the risks of cryptocurrencies and acting to mitigate them using the authorities that the executive branch has. The future of rules and laws in the U.S. is still not clear. Both this comment and the SEC's ongoing enforcement crackdown send bad signals. On the bright side, the new chair of the House Financial Services Subcommittee on Digital Assets wants America to be the leader in fintech innovation. This shows how important the Ripple case is. If Ripple does well, more fintech companies will want to do business in the United States. If the opposite is true, there will almost certainly be a mass exodus of crypto companies and people who are good at what they do. Because there is so much at stake, the Ripple vs. SEC lawsuit has become a turning point for how cryptocurrencies will be regulated in the future. The outcome of the case will have far-reaching effects, not just for Ripple and XRP but for the whole crypto industry. As the date of the final hearing gets closer, everyone in the crypto community can't wait to find out what will happen next. Thank you for watching. Please subscribe for regular updates in the blockchain community.